There is always lots to talk about in the Vancouver housing market, especially these days. We have plenty of updates this month on interest rates, on trigger rates, on the investor and rental market. Let's get into it. Housing activity remains on the same course it's been over the past few months. Greater Vancouver home sales dropped 40% year over year in August, and over the past couple of decades, the only years slower have been 2012 and 2008 for sales volumes in August. So what I can tell you anecdotally is that sales activity has been picking up ever so slightly. I think the initial shock of the higher interest rates is wearing off a bit. This does not mean sales are about to normalize, nor does it mean that the prices have bottomed. It simply means that there is a bit of liquidity coming back to the market after a complete standstill over the past few months. Lower prices are bringing some buyers back to the market, albeit very slowly. We saw a similar dynamic in 2016 when the foreign buyers tax was announced. There was a giant shock to the market. Sales activity froze for several months before slowly picking up again as the market digested it. In the markets, nothing ever moves in a straight line. So sales remain incredibly weak, but are picking up off the lows. Downwards pressure on price remains fully intact, however. Incredibly weak levels of new listings there was providing the support to the prices. In August, new listings for the month fell to 20-year lows. It appears that the sellers, they're equally frustrated with the prices as the buyers, and they're opting to delay their listings or they're pulling existing listings off the market. So while sales are incredibly weak, so too are new listings. This continues to be the story over the past few months. So if we're going to see another leg lower in prices, we'll need more inventory. We currently have 5 months of inventory for sale, and that's elevated, but it's certainly not problematic. Months of inventory at 5 is considered a buyer's market, and the prices are reflecting that. The largest price corrections are still showing up for the detached houses. The median price is now off 15% from the February peak. Price declines are less severe in the condo market, where prices have officially dropped by 6.7% from the peak. Keep in mind, as we have discussed many times in the past, condo prices tend to lag the detached house prices. They're the last to increase in price, and they're the last to correct in nearly every market cycle. I'd expect more downside coming. So to summarize, housing demand remains weak. Buyers are slowly coming off the sidelines, but not at a quick enough pace to reverse the course. The initial shock of the doubling of interest rates is starting to wear off, but mortgage rates of 5% are still too restricted for a highly levered property market. Investor demand, it remains the weakest given the deteriorating cash flows that are following the higher costs of borrowing and, of course, of maintaining a property. So this will likely prompt more investors to sell, and it's something that we're watching closely over the next 6 months. It should be pretty uneventful fall market, but hey, let's see. I'm Josh Kepke with McDonald Realty. This is Vancouver Real Estate Today.ca. That's the website. If you have any questions about your specific area, hey, feel free to give me a call, text, or email anytime, 604-313-9805. or sold@joshkepke.ca. You can also get us at hello@vancouverrealestatetoday.ca. And hey, if you found this video informative and want to see more in-depth market updates just like this, analysis from a boots-on-the-ground perspective paired with that macroeconomic viewpoint, hey, click the subscribe button. We'd love to have you as one of our followers. Thank you, and bye for now.